Geopolitical tension is back on the oil market. However, it doesn't look like the geopolitical risk premium is doing a lot to change the trend of a relatively weak pricing environment for oil markets. Obviously, tensions between Israel and Iran have created a short squeeze on oil prices because a lot of market operators had taken very aggressive short positions after the massive increase of production of OPEC+. But let's go through a number of elements that we need to take into account, and the timeline starts with the decision of the International Atomic Energy Agency to send a very aggressive and direct message to Iran saying that it wasn't complying with its commitments of transparency in terms of its nuclear program. The response from Iran to that resolution was very aggressive as well, and obviously not trying to comply at all. In fact, what they did was to say that they were going to add a new nuclear terminal. The information that the International Atomic Energy Organization presented was that Iran had been enriching a very significant amount of uranium and with very high levels of enrichment. Let's remember that if you want uranium for electricity generation purposes, you'd only need around 3-4% enrichment. However, there were more than 400 kilograms of uranium accumulated by Iran with about 90% enrichment, which means military grade. That, added to the defiance in terms of complying with transparency and commitment to nuclear proliferation limitations, and the decision of the Iranian regime to increase by 200% its defense budget, all those things came at the same time as OPEC Plus decided to massively increase production. Obviously, discounting that there would be an increase in tensions globally. All of those things are relevant. Why? Because now we know two things. Number one, the Iranian regime doesn't have any power to limit the movements in the Strait of Hormuz, and that is critical. Despite the fact that they have said that they have prohibited the movements, the traffic is not up to them, and there's a lot of countries that have already proven that in the past. Number two, production globally, both from OPEC and non-OPEC countries, is ample enough to offset any type of risk coming from lower Iranian exports. In fact, China has secured its requirements of supply with Russia and other countries. Hence, what we have is an environment in which the United States is producing 13.4 million barrels a day. Saudi Arabia and Russia can increase their production by 2.5 million barrels a day. And the OPEC Plus members are committed to ensuring that supply is going to be ample, and at the same time, freights are going to move freely without a problem, despite geopolitical risk. That doesn't mean that we need to ignore geopolitical risk, but it's certainly limited in terms of supply and demand.